morning, everyone. Daniel Cook here with Cook DFW Roofing, and we are going to continue on our series about insurance claims, simplifying them, understanding what the terms and the lingo is, and then trying to figure out what kind of help you may need if you do have a claim that might happen at your home. So we are going to dive in more about ACV, RCV, diminishing value as far as what they consider the value of your property. And we're going to, go over some other items that may pop up. So anyway, we have Lyndon here with us. Lyndon, are you here?
I am, man.
All right. Good morning, Lyndon.
Good morning. Ready for part three.
Part three.
Anybody that's watched part one and part two, which if you haven't, please go back and watch those two, because I promise you're going to learn some things that to your advantage about insurance that you really, really need to know. So that's really all I got to say about that. Daniel, you have shared some things that I had no idea, and I imagine there's a lot of more just like me out there. So I appreciate what you're doing for homeowners, the community, and people that need an advocate like you at Cook DFW Roofing.
Yes, sir. I appreciate that. So insurance is not easy, and we don't really think much about it. We just know that we're told that we have to have it. It's to protect the mortgage lender more than anything, because they're investing that $200,000, $300,000, $400,000, $500,000 for your house. And so if you do not have the right insurance or your home is not covered, then they're out, and they don't want to be out. So remember that not all insurances are equal. Everybody prices what they feel like is a good policy, but they really have not looked at their declaration page. I don't know how many times you've looked at your personal declaration page, Lyndon, but you might be surprised at what's covered, what's not covered sometimes.
Well, I was told one time, Daniel, that not just insurance, but sometimes they unnecessarily overcomplicate it so that people don't dig deep into it. And they just go, that's over my head. Whatever you tell me I need is what I'll take. And what I'm learning from you is it doesn't have to be complicated if you understand it. So, again, we talked on the last show about having that advocate. A lot of us, we kind of get our bullpen of people that we have, but we don't listen to them and let them educate us on things that we really need to know and understand. So I want to encourage everybody. This is what this show is all about. We're doing insurance through these three parts. Daniel's got a plethora of other things that he's going to share with you that are really going to help you become a better homeowner. That's why we call it home cooking, home ownership made easy. Obviously, if you can't figure out the cooking part and why that's part of our show, then that's a discussion for another time.
So, well, we won't get off track too much. I know in the last episode we kind of ran around a little bit for some really good topics that we're going to touch back on. So, but for right now, we briefly discussed what RCV and ACV was, and that's very important terms that you need to know. Replacement cost value is RCV. Now, a lot of policies in the state of Texas are supposed to have an RCV value associated to them. There's even been discussions that policies that convert to ACV, actual cash value, are written up on an ACV table may not satisfy the mortgage lender's requirements. Now, I have not actually seen any cases yet that mortgage lenders are requiring proof of an RCV policy, but that may come up as these policies start changing more and more. So a lot of talk in the insurance industry as a whole, not just one or two companies, but as a whole, that they are trying to figure out how to reduce their risk, reduce their payouts, and yet still make a reasonable amount of premiums collection. And so by doing this, they're going toward the ACV or through a conversion table matrix that says basically after you have insurance with us after 10 years, your RCV becomes ACV automatically, and there's nothing you can do about it. If you want to keep your insurance, it will convert to ACV. Now, the exclusions in that would be if you had a roof replaced on year 5. Well, that's now your table just converts back to a brand new table. because that's your biggest expensive payout is your roof and your other property damage that associates with that. So that's a way that your policy would keep converting back to RCV, is if you had a roof replacement every 5 or 7 years. A lot of terminology out there is, there's a class 4 clause, and a class 4 is a type of shingle that has a UL rating of class 4, meaning it's hail impact resistant, not proof. A lot of people have this conception that once they put a class 4 shingle in their home, that it's going to become hail resistant or hail proof, and they won't have to ever worry about damage to their shingles again, and that's not the way it is. What that means briefly is that a UL testing laboratory said this shingle can withstand up to a 2-inch hail impact without breaking the matting and causing granule loss excessively. So when that happens, it doesn't mean that if you have a 2-inch hail event at your house for 30 minutes, that your roof is not going to be damaged. It will be, I guarantee. It's just that if you had a couple of 1-inch hail events at your house and they were kind of minimal, that your roof would withstand that damage better than your neighbor's house that does not have a class 4 shingle. Why we talk about class 4 shingles is a lot of insurance companies know that. And so they're willing to give you a premium discount, sometimes up to 25-30%. So if your insurance is, $3,000 a year, well, that means that you probably could get up to $750 off your premium if you put a class 4 roof on your house. Now, the flip side of the coin is the likelihood of you having to have your class 4 shingle replaced in that 10-year mark is lower than without that. And if you have a policy that converts to ACV after year 10, well, now you basically are going to have the full value being taken away after year 10 on your class 4 roof. So you're going to be held liable for the ACV replacement of that roof in year 12, 14, 15, whenever you actually have to have it replaced. So that leads into some, items there to think about. Do I want to take that risk and have a better quality roof that may last longer if my policy is a conversion one that goes to ACV? So you got to think about those type of things. RCV policies are still going to be written, but the days of having 1% deductibles are going to be fading away very fast. Most insurance companies are going up to 1.5%, if not 2% deductibles. And the only way you get away with that is if you use a bundling program, which they want your autos and your home. They'll give you a 1.5 versus a 2. Or they may have exclusions that say if your house is 5 years or newer, you can qualify for a 1 or 1.5. But if it's older than that, it's going to automatically be a 2. There's all kinds of discussions out there. I've talked to all firms, all kinds of different ones, and every one of them are changing. So if you think yours isn't, it will. It's just going to take time. They're going to lean this in little by little. So just because your policy is a 1% deductible today, or hey, better yet, I know some companies have a flat dollar amount deductibles. Those are going to be fading away as well. Those days of having a simple $2,500 deductible or $4,000 deductible, those are not going to happen much longer. So insurance is going to change. So you need to understand your policy. Take time. We talked about this briefly last episode about knowing your contractor before you need it. And that's super important. It's just as important to have a personal relationship with your insurance company. So you need to be able to say, hey, my policy is about to renew in November. You need to start looking in September and say, what is my policy changes going to be? And then go ahead and give another 2 or 3 quotes. Make sure they're apples for apples. I've seen this so many times where people say, I'm going to switch to A because B is too much expensive now. Well, is A giving you everything that B is? What is your premium, based off of? What is your dwelling expense? What is your replacement cost? Those are critical numbers that you need to have. What is your deductible going to be? What riders or exclusions are they not going to cover? Marring coverage I see is getting excluded a lot from insurance policies. Marring coverage. Do you know what marring is?
I do not. And I was going to ask you, what is marring?
Okay, so marring is the metals that your house has around it, meaning gutters, meaning exhaust fan toppers, meaning the box vents and the turbines, all the metal around your roof. That could be excluded on a claim. And so on a normal house right now, gutters are going to be about $2,500, $3,000. All that little metal chimney chases and stuff like that could be another $1,000. So on a roof claim, you could be losing out on potentially $4,000, $5,000 worth of metal that's not going to be covered if you have a roof replacement. So those are things that you need to know. Do I have marine coverage? Are my metals covered when I have a weather event happen? So, but I've seen that's a lot. That's a big one that I've seen left out in a lot of policies. Like they just save money on the premium. Another one is code upgrade. Code upgrade says that if your house was constructed during a time that a code was not enacted, that when it does get refreshed or replaced, that the contractor is able to bring up all the items on your roof to code. So, but if you don't have that, and the city requires those items to be brought up to code, then that's something that the contractor and you're going to have a discussion about, because more than likely he's going to say, hey, in order to replace this roof, I can't put those type of shingles on. Like I live in Melissa. Melissa adopted a code in 2012 that said we no longer want to see 3-tab roofs in our city because they don't last. They don't look aesthetically pleasing. So we're not going to allow builders or homes to be repaired with 3-tab shingles. And just briefly, what a 3-tab shingle is, it's just those simple shingles you see that lay side by side. There's no overlay or anything like that. They have a very low wind, protection. They only allow wind protection up to 60 miles an hour. They're just a very basic shingle. They're good for sheds. They're good for carports. They're good for those type of things, but not a house. And most home builders don't use them anymore because of just that factor. They don't last. But in the city of Melissa, they made it to where home builders couldn't, and insurance could not be brought back to a 3-tab. You have to upgrade every client here to an architectural overlay shingle. Well, if you don't have code upgrade, well, you could be footing the bill for the difference between the architectural shingle and the 3-tab shingle. So
what would that difference be on a standard square foot home?
Let's say it's a 30 square home. I mean, it could be right at about $750, $900. So that's additional money out of your pocket that you may not know about. Now, some contractors may absorb that as a courtesy, and that's great. We automatically do that. Our personal company does, but I know contractors that do not do that. Okay,
right?
Because they don't feel like they should.
Sure.
So that's as part of business. There's also items other than shingles like crickets and saddles for chimneys. 2012 was the year that the cricket law or the code came into effect, which means if you have a chimney that has a face of the chimney that's at the base of a slope of the roof, and it does not have a diverter called a cricket or a saddle, that you have to then have one of those built when you replace the roof, because that's the current code. They want a diverter of that chimney so water doesn't sit and cascade along the base of that chimney on that low slope. So they've enacted a code called a cricket, and so now all those homes that have roofs replaced, this is very common in Plano, areas that have older homes, some of Wiley.
How many years back you think that goes? When did that,
that code came into effect in 2012.
Okay.
So
anything before then
didn't have a cricket, more than likely.
Right. So they would have to pay the fee for code adjustment or whatever.
Code upgrade. But if your policy has code upgrade, then great. Those will all be converted automatically, and you walk away. Your home would be updated to the current code. Everything would be put on the home like it should be, as in 2022, and we would just what's called a post supplement to the insurance company as the contractor. We have to pull those codes. We have to prove that the city requires us to build them to those codes. And then we just submit that bill to the insurance, and the insurance will then take care of it. But again, it's knowing, do you have those type of coverages? So there's so many other ones out there. I don't know all the different insurance, declarations. I'm not an insurance professional. I just deal on the claim side. So I unfortunately have to deal with this side of the business so much. I have become educated on the claim side,
right,
and supplements. But I strongly urge you, get a relationship with a great in-person office insurance agent, because there's where you're going to become, It's wonderful to walk into someone's office and say, hey, listen, I want to set an appointment. I want to go over my declarations with you in person. I want to know this policy. I want to know what's covered, what's not covered. It's so much more relaxing than calling a 1-800 number from somebody that may or may not be in the United States. They may be in a state 6 states over from you. They may not know Texas law. They may not understand what the TDI, Texas Department of Insurance, requires in their policy, especially why they know what you have coverage on. It's just going to make it 10 times harder to understand your insurance policy if you're using 1-800 numbers. So
here's a quick question for you. If we talked in the previous show about having that bullpen of different professionals that you already have the relationship with, so you don't get caught in a desperate situation. You've got a good relationship with them. If I were to do that, okay, let's say that I'm a new homeowner or been a homeowner, but I got a new home, or I want to put that team together. Is that something that I could sit down with the right people and they look at my insurance page and go and help me understand? Because, some insurance agents are not going to explain it the way you're explaining it. Because
I wouldn't do business with that agent. If your agent is too busy to educate you as the client, then you don't need to be the client.
But do they truly understand? Because I know, being in mortgage and working in the real estate industry for 20 plus years, you get so many people go out and they get the cheapest insurance policy. No one really explains it to them. That's why they get hit in the head with a 2x4 when it's time to file a claim. And so maybe it's the homeowner's fault that they didn't go into it deeper, but maybe they also didn't understand how to go into it deeper. And they just assumed that, like the RCV, ACV thing, if that wasn't explained really well, how would I know how that affects me if my roof gets some damage? So I guess what I was asking, and without, obviously every business, yours included, only has so much time. We all want to be relational. We want to be there. But is that something that as a homeowner, if I called Cook DFW Roofing and I said, hey, I want you to be my roof guy. I've heard a lot about you. But I also want to know that if something happens, am I good with this policy? Would that take too much of your time? I don't know how to ask this question without making you, putting you on the spot, but could you help me understand if I had what I needed? Or
it's kind of a catch-22, Lyndon. As a contractor, the way that our TDI, Texas Department of Insurance, and insurance companies directly, the contractor by law, unfortunately, I cannot make you understand your insurance or speak of what your policies are covered and how they're written. The insurance companies have made that into a law, basically.
Okay.
It's a part of a situation where I can lead you down the pathway, but I cannot educate you formally as an insurance professional.
Just like I can't give tax advice because I'm
right.
Not. Okay, gotcha.
And so I can talk about the construction side of the business. I can talk about how the claim is going to work based on your policy, but I cannot direct you or coach you on insurance. Now, there are people in there that are called public adjusters. Public adjusters have the ability of discussing your premium and your declarations and how your policy is written because they have a special licensed public adjuster, basically. There's an umpire. It's the next position called an umpire. Umpires basically have a decision between two public adjusters. They also can talk about the lingo and the language within your policies. But as a contractor, without a public adjuster's license, I'm not able to actually go down those paths with you. And I know what you're saying is that, hey, how does a new homeowner even understand what they have? Well, unfortunately, it's the old saying. It's buyer beware. You've got to do some research before you sign contracts. And people have gotten so loose with this in the last 10 or 15 years. I don't know about you. I'm pretty sure. I'm pretty confident. Me and you are really similar. When I was growing up and I bought my first car, it was a paper document. It had, 40, 45 sentences on it that you read. You read, you understood what a compound interest payment
Yeah.
was, what a prepayment penalty was, what was my interest payment going to be, how long, what was going to happen if I missed my payment on the first. It automatically grew by $100 if on the fifth. I mean, you read this document up and down, and if you didn't, you were a fool. I mean, that was just the way it was.
But they also weren't written back then to give the lender, the company, loopholes to get out of something. And so
Right?
and a lot of those documents now are, and that's just business, I guess, or where we are. But you just made me think of something. So I buy a new house. I'm trying to get the most affordable insurance uh, plan that I can, keep my costs down. When I'm sitting there talking to my insurance agent, he's telling me all the things that are covered. I think one question that homeowner needs to ask is what's not covered, because
Yeah.
we may not do that. Okay.
Yeah.
To you, I want you, Mr. Insurance Guy, to tell me something that could happen that I don't have insurance for.
Right.
And I
Well,
think that we need to be better at having those conversations and not so in a hurry and just assume that everything is cool until we
right.
find out it's not.
Well, unfortunately, there's no way that an average homeowner is ever going to know everything that they can have or don't have. I mean, I'm just going to tell you, that's physically
Yeah.
impossible. You would have to go through insurance school to actually understand everything. And it's not going to happen. We all know that. We all have our own professions, right? We all work our own 50, 60 hours a week. And then you have to make a 2 hour window to understand your insurance policy seems a bit atrocious. But, especially when you're shopping. So say you have to do that 2 or 3 times. Say you want to sit down with Farmers, State Farm, and Allstate, and you want to go over their policy with them. Let's be common. That ain't going to happen majority of the time. What I would suggest, and this is just a mere suggestion, is develop a relationship with somebody in the insurance business that will take the time with you, and that you have enough time to at least once go over what is my policy included, what are some items that are excluded, and what are the differences in pricing, what would that make it? People, believe it or not, a rider for like Mari, we talked about Mari.
Mm-hmm.
When they remove that Mari rider from your coverage, that usually knocks your premium down like $24 a year. These are the kind of things that we're talking about. And there's an old saying, we're stepping over dollars to pick up the dimes. And that's what people do. People, they just look at that bottom line price and they say, that works, that's perfect, that's what I want. So, but for $100 more, they could have coverage that is 3 times better. But it's $100 a year. Well, that equivalents to what? That's going to be $8 a month.
Right.
So you're basically basing your coverage on your $500,000 house at $8 a month. And it takes time for people to understand these things because they just look at the price. They don't look at the coverage and the differences of what could be better coverage. So like you're back to your saying, replacement costs of rebuilding, dwelling is super important. Very basic formulas. So if your house unfortunately has a traumatic event, tornado blows it off or fire knocks it down, traumatic, total loss. What is it going to take to rebuild your house in 2022 versus what your policy is written for in 2015? Have we not had a major inflation and construction costs go
oh
up?
my God, yes, yes.
If you have not looked at your policy though, and your dwelling rebuild is still set at, let's say, $145 a square foot, good luck. Good luck getting a home to be rebuilt at $145.
You're going to automatically be downsizing, aren't you?
You are done. You are done. You basically have a plot of dirt out there. You're going to have to be building half the house that you had.
Well, you just made me think of something. Everyone, well, I can't say everyone, but it should be everyone, but the majority of us understand that our home is not just a home. It is a financial investment. It is an investment that can give us a really good return at some point. It becomes an asset. And if you skimp on your insurance policy, you're not protecting that asset. You got a great way. I mean, you can't do that with the stock market.
Nope.
You can't put $500,000 in the stock market and have an insurance plan that would cover it if you had losses.
Nope.
But you can as a homeowner.
Right.
And so if I believe over the next 10, 15 years, I'm going to have some appreciation, and I understand the possibility of inflation, then I really want to pay attention to my insurance policy so that investment, I'm going to maximize it so that if I ever get ready to sell it, I'm going to get the most out of it.
Right. Yeah. ROI is important in every investment that we make in our lives. And sometimes ROI is greater than others in what, vehicle you use. A lot of people love real estate. And why? Because of all the things you just mentioned. It appreciates. It has a better return to net. It's covered. It's insurable. I mean, what is there a loss? I mean, I don't know how you. I mean, they're not making any more land. I don't know of any place making any more land. It's pretty much, if you want to live in a congested, suburban area, you're going to have to pay the prices that those houses are bringing now. So if you're investing in your home, in the next 10 years, your house is going to be worth another 20% higher. Yeah. So it's just a common thing. It's going to happen. So yeah, you should be doing everything you can to protect your property, protect your investment, make it grow, better than you could put your money anywhere else. But it goes back to, so $8 a month, I could have full replacement cost value, mine coverage, code upgrade, or I could have my 2 Starbucks a week that I'm going to sit in line for 30 minutes. That's really what it boils down to. I mean, I hate to say it that way, but this is what we do as a civilization. We are a convenience civilization. We want everything when we want it. We don't think long term anymore, and that's the biggest. That's the biggest difference. And I could say I'm 50 just about, and I can tell you my kids don't think long term.
No,
and it frightens me to death.
Yeah, we're in a microwave society. That's for sure.
We are, and it's like I want it now, or I don't care about that right now. I'll care about it when I need it. That I hear that a lot of times, and I don't. It's not a big factor to me right now, And unfortunately, I'm not in the insurance business. I'm in construction. I want to make people happy with what they want, But at the same time, I want to make sure that they have every ability of protecting themselves and understanding what they're getting themselves into when they buy a home. That's the whole reason for the show, like we talked about, right? When you buy a house, you are opening a whole different box of problems, unfortunately, that can become substantially bad if you do not have the proper coverage or the proper research into home ownership. And we all need to think about that. We all want to rush into buying a home, right? That's our goal. We want to buy a home. That just like the cherry on the top of your life. That's like, woo! I bet I made it. I'm an American. I've got my home. But then we don't think about how much money that brings into the equation and what you have to do now to be a home owner successfully. So,
right. Well, Daniel, we got about a minute and 15 seconds. So I want to make sure that we get everything wrapped up. I don't know if we're going to be doing a part 4 on this. We probably could go 10, 15 different parts with
we could, but I think, I think that's beat this horse enough. I think, if they want more information, I feel like I have excellent people I could convert them to that specialize in insurance, all kinds of different companies. I work with gentlemen that State Farm, Farmers, Allstate, Texas Farm Bureau. I have people in every brand that I trust, that if people want to get information from, if they want to get some information about insurance, I would direct them toward them because they're people I trust that I send referrals to, and I want them to get the proper policy that's going to protect their home long term, not just at the time that they need a mortgage and they had to go under a certain dollar amount to make sure that they were going to get their loan.
Right. Well, I mean, you really are a resource and a good resource. So I encourage anybody watching, if there's more you want to know about insurance, Daniel will either help you or put you in the right place. But Daniel, I'm going to give you, we got about a half a minute left. I'm going to give you the last word and let you close us out.
Okay. Well, guys, if you have any questions that I can help you with, please feel free to reach out, give me a shout, call me, email me. Just let me know. I want to be able to help y'all in any way I can. I strongly urge you to have your insurance looked at annually, just like your roof. Your home in general needs to have annual inspections for the best way possible to make your home last, secure, and protect your ROI. Y'all have a great one, guys. See y'all next time.